All right, guys. Paul Singh, Market Speculator, with the trade report for Friday, March 2nd, 2018. Recording this video in the evening. If anything changes in the morning, I'll send a note out. Otherwise, this basically is for Friday. Just as we talked about March seasonality and how March is a really good month, either the best or the second best of the year historically with seasonality, we tanked on the first day, and there was a very specific reason for this. Uh, President Trump's uh, proposal on tariffs sent the market down. At least that's what is being said to be the cause, and steel stocks are rising because of that. Now, one thing to mention here: anytime I talk about what the president has proposed, it's apolitical. It's only related to how it relates to the market, and we have to know these things. So there's no judgment on if it's good or bad. It's just that's what is, and that's what's impacting the market. Just mention that because sometimes when I mention the reason or the cause, I get some mail that I'm talking politics, which I am not. So he talked about tariffs that caused some concern. Obviously, it's good for steel stocks because the import tax will help U.S. steel companies, but there are some concerns on how this impacts trade. China, Goldman Sachs is concerned, banks are concerned. So it sent the market down, at least short term. That doesn't mean it's not going to reverse. The past 2 years, anytime there's news that is concerning, that where we get something like this, we tend to bounce back pretty quickly. So we're not going to make any technical analysis judgment calls here, but we did break a key level yesterday or today. So we had already pulled back 1%, 1%, and then we're testing this level. And we talked about how if this breaks, we could get a retest of the lows. So a couple of things to talk about here. And most of what we're talking about here is setting us up for the future. I really doubt we're going to do anything tomorrow. Now, I know I did say if we broke this level, I would consider shorts. The reason I did not is because I thought it would be just a regular kind of move down, but this was news related. And because of that, tomorrow something else could be said, or we just discredit the news, or the market kind of discredits the news, which it's been doing over the past year or two, and then we pop up. So I didn't want to establish a news-based short, basically. So the best thing to do right now is to kind of sit back and watch what happens, be patient. Got stopped out of some positions today. We did add a steel stock. And when we get into steel, I will talk about long-term a little bit as well, which we usually focus on swing. But remember, we can get these double bottoms here or W patterns, and that still can be very bullish. That's what happened in January 2016, and that's very common. After big down moves, we had the big W pattern and then the big run. Whereas Brexit, we had the straight move up. So this is not necessarily a bearish pattern here until we break this level. If we broke here, then we'd start to get very bearish. But right now, even a retest here is fine. So we're going to keep an eye on this here. Ideally, if we're looking to get long, and that's the easier trade, is if we can, remount the moving averages and get back on trend, and we'll see if that happens. So that's kind of what's going on in the market right now. And if we look at basically almost everything you look at, you're going to see the same thing: big down moves. We know the Qs have been showing relative strength, but even now we've broke the 9 and now tested the 50 and bounced. IWM here, probably because of some of the areas that are more weighted in IWM, like oil and steel, is probably the reason this didn't close more towards its lows, but still IWM heading down. And if we look at oil actually put in a hammer right after we got, we've been stopped out of this, but I don't think it's safe to really get back in at this point. So that's what's going on in the market. Now let's look specifically at steel. Actually, before we do that, I'm going to point out one other stock. Almost everything was red today. Twitter actually was green. and it got up over the 9. So Twitter is showing relative strength, and we know it got good earnings here. So definitely keep an eye on Twitter. The other one is our own position in Netflix. It's nice that one of our positions actually held up really well. Netflix, still within its range, not breaking any key levels. Tested the 9 and bounced intraday and got back up to 192, right at our entry point, basically. So we're happy with Netflix. We're watching Twitter, and now let's get to Steel. So we entered X today, and this was solely because this was very news based. So the pattern is good as well. We know we have a good volume pattern here. We did get up to the highs here, which is good. But this is one of the occasions where, even though the pattern is great, I basically went off the news. It's such good news for something like US Steel that it could make a really big run, especially if what Trump is talking about, what he's proposing, holds up. And we've been eyeing infrastructure since he was elected because that was going to be a big play for him, and we've been getting that now with X. It's already made quite the run here, since the election, and now this could be the next really big move if some of this stuff pans out, even if the market is going down. And you can see we'll pull up steel here and look at some more steel stocks. Across the board, steel was really strong. GGB, which is a Brazilian steel company, was green. Let me go by percent change here, and you can see the AKS. We're going to keep an eye on AKS. The reason I didn't take it, even though it was up 9% bigger than US Steel, percentage gain wise, was because the overall pattern is not as good. USAP, this is too small of a stock. Let me go. STLD is one we like as well. So these are the ones we'll focus on: STLD, X, and AKS. And AKS needs to improve the overall pattern, but STLD is also really nice. So if you're looking for another steel to play, STLD would be a good one as well. But you can't really beat X. X is going to give you a lot of volatility, really good pattern. So we'll stick with X. That's our current position now, along with Netflix. And those of you who trade long-term, whether it's out of trading accounts, whether it's self-directed 401ks or whatever your retirement accounts, whatever you're doing, you definitely should have some infrastructure plays in there that's at least a small percentage of that portfolio. And obviously steel is a good one. So I would definitely be exposed to that. But going back to our trading now, we have the steel position. We still have Netflix. Interestingly enough, WBAI was one of the few stocks, and we were shorting this, did not break the 9, and then came up to our stop level today and was one of the few strong stocks on a down day. So that stunk. So we got stopped out of that. And then LABU actually bounced back really nicely, and we had to get out here. When it hit that 85 level, we talked about 85, even though it held our initial stop. But I didn't want to turn what was becoming a decent profit into an average loss. So I was willing to. This ends up being a really small loss where we got out. So almost break even. And then UWT 2620 we had talked about, and it went through that level. Well, this was yesterday, through that level today, and is putting in a hammer today. So we'll keep an eye on oil, but our only positions now are the X and Netflix. And I would continue to watch steel plays, potentially some outlying things in metals, coppers, something like that. Keep an eye on oil, and potentially, if the market continues to slide, then we'll think about shorts, but probably not going to do anything tomorrow. We'll assess, see what happens over the weekend, and then see what the market patterns, how the market patterns develop going into next week. Still, we'll keep an eye on March seasonality. This is just the first day, but eventually we should get a run in March. There are fundamental reasons why March tends to be good, related to how companies do their books and earnings. So we'll still keep an eye on a big run on March, but we're not going to do anything at this point.